Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com. I'm going to talk Apple. I haven't done a video in a while, so I know you guys like it quick. It's been a crazy month or two, starting from the decline from 700 down to the low of 505. I want to give you a quickie on what you could have seen and where we are now, so let's just get right to it. If you look at the chart of Apple, look what happened here. Okay, first things first, remember last quarter's earnings when it gapped down, filled it really quick, and then rode the 8 and the 21 day all the way up into iPhone 5, and then PS what happened? We broke the 21-day moving average. That was a spot where I said it's time to trade it, that we could see the 50-day, and you never know what's going to happen. So what happened? It broke the 21-day, guys got out of the way, quick move all the way down to the 100-day, bounced off it, and really never got its footing. So what got created? A head and shoulders top. You had your left shoulder, the head, the right shoulder. What also happened? You had two trend lines. One, the accelerated one. Everyone trades accelerated trend lines, or everyone has a different time frame. For me, this was important. So not only did we break the 21-day and break this accelerated trend line, we stayed below it. And then what happened? We broke another key moving average, and then this pattern triggered, and you saw it move lower. Here we go to a more gradual trend line. From this trend line, we broke it again, came back, tried to retest it, and then there you go with a very sharp decline all the way down to this low. So if you come back to me, when a move happens and a move takes place, it's very easy to get emotional, it's very easy to get attached, and that's the last thing you want to do as a trader. So if you sold something correctly, and you definitely don't know where it's going to go, the same way if you buy something correctly, sometimes you can be pleasantly surprised. So it was November 16th, I think I was giving my seminar in the trade show in Vegas, and you finally saw the capitulation move happen in Apple. You finally saw the reversal that we all were looking for as we got a few paper cuts as we were trying to buy a level versus a level during that decline in Apple, and that happened right here. So you go to the chart, you will see, when it broke through this level, broke through a key level, stopped everyone out. Everyone got all fearful. You had a brilliant reversal. Look at the volume right there. Let's take a closer look here. This, my friends, is your typical classic red dog reversal. After a huge move lower, you get the last sellers out of the way, the last shorts, need to cover. You get big volume. There you go. Your entry right there was 522. Talked about it, guys, on my virtual trade floor. Saw it finally go green, and then for the first time, it left yesterday. I think for the first time during this entire move, you did not see it. So this was a really nice hold. You didn't know what was going to happen here, but all of a sudden you get your red dog reversal, you get your outside day, you go with it. Then what happened if you wanted to measure it? I like to measure moves, right? Everyone likes to measure moves. So does red dog. Okay, and here you go. Let me get it a little closer. This was, your follow-through day. And then what happened? It held higher. You had another little entry above 572, and now look where we are. So the question is, what do we do here? So I'm going to put up some Fibonacci retracement levels, look at a situation on how to get back involved in Apple. And right now, the 25% retracement of this entire move comes in around 569. So not saying we're going to get there, but it could. And that's a point of interest. Holding the 25% retracement, I do think, is key. That's an area that I would like to buy it back. But if it doesn't get there, you need to measure it along the way. First level is right here. That's the low of yesterday, which is 580. I do not think this holds. We're right around there this morning. What I will also try and do is I will see if it holds ahead of it. So right around 575, that is an interesting area to see if we could buy back Apple. If you look at the last time it paused, it did not really retrace that much, and it continued. So the speed was fast. If all of a sudden we don't hold this 575, the speed might change. So write down these levels, 575, that's a spot I'll look to see if it shows relative strength. Then you have 569, and then ultimately, this is a major, major area. I'd be very surprised if we get there within the next week. I think they're going to try and keep the momentum pent up through the Christmas holiday, but as at this point, you never know. So this was a great buy. Those in the virtual trading floor, our subscribers, got involved, or if you stayed with us, congratulations. Nice hold, nice swing trade. And at this particular point, I am flat Apple. I'm going to try and approach it as a two-way trade. First level 580. Then you have this 575, which we could see that today. And we'll see if we see any relative strength. And then you have your fibs right there to go with. So all in all, and I know Apple knocked a lot of people across the board, with the size of the decline from 703 all the way down to 505. People are saying, will it ever make new highs? At this point, you never know. All I know, it's a great company, fundamentally rock solid. I think they're going to have great products going into New Year's. Actually, they do have great products, and I think they're going to be, in demand. The question is, how is it going to behave technically? We just had the first real powerful move off that, red dog outside day reversal. Now I do think it's going to be important to measure where we pull back to see where we're going at this particular point. I have no Apple. I'm going to look to see if I can get involved in a two-way trade. So stay tuned, and I hope you have a great day trading.